Good morning, good afternoon, good evening. I'm John Matthews, Executive Director for the Alliance for Global Water Adaptation, or AGWA. Welcome to the first in a series of 4 webinars that will explore the issues and opportunities for translating resilience into an operational set of economic practices and policies called Unlocking Economic Resilience, Mobilizing Water and Climate for Thriving Economies. This series will be in 4 focal topics: insurance and reinsurance, today's session, followed by banking and lending, credit rating agencies and processes, and then macroeconomic policies. The session is being streamed and recorded both through direct Zoom links and via LinkedIn's live streaming service. Welcome to you all. We're very glad that you're here. This work, I want to say just a moment about that. It's called the Water Resilience for Economic Resilience Coalition. We're an open collaborative group which collectively sees that climate change is driving profound shifts in how we evaluate and manage economies and the larger financial system, even to the level of economic analysis. Simply trying to de-risk our economies from climate change seems incredibly insufficient right now. We need to think on a different level as we see new challenges emerge. As a group, we've also come to see that water resources present both systemic risks and systemic opportunities to how we experience climate impacts and how we enable resilience between sectors and within the financial system as a whole. I hope you'll reach out and join us in this work. Today, we will focus on insurance and reinsurance. We'll begin with a brief presentation launching our first publication from the Water Resilience for Economic Resilience Consortium, then move to 2 keynote talks, followed by an open discussion, and closing with remarks from a team lead from the OECD. These are the co-conveners. It's a long list. I'm really glad that we have a thorough listing of them. It's an impressive group. I think you'll agree. Public and private sector, major IFIs, and NGOs that are spanning a huge range of areas, but all of whom see climate and managing economic change during a period of climate change is central to our work. I now turn to my colleague and friend, Niels Vlaanderen. Niels is the coordinator for international water affairs and an economist with the Ministry of Infrastructure and Water Management for the Kingdom of the Netherlands. The floor is yours, Niels.
Thank you, John. So I was asked to introduce the report of the Water Resilience for Economic Resilience Initiative. As awareness is slowly increasing on water's pivotal role in the risk the world faces today, and for the years to come, this is especially true for the effects climate change has on the water cycle and the resulting impact on our economies. With this recognition, the Water Resilience for Economic Resilience Initiative aims to increase awareness among financial and economic institutions regarding the importance of water resilience, for it has also become increasingly clear that proactive thinking and implement measures are needed to address these issues. This document aims to shed light on the importance of integrating water resilience into economic planning, offering guidance and practical examples to policymakers, financial institutions, but also for today, it's in the insurance and reinsurance sector. Next slide, please. Water is at the center of economic resilience. Economic resilience ensures that we have the capacity to adapt our economies. But most macroeconomic models assume that water is an unlimited, predictable input, but in reality, water is a flow that has its limits and that can evolve or is modified. It also crosses administrative and sectoral boundaries, and is often hidden in the sectors such as the energy, cities, and agriculture use. Water can be mobilized as a medium for climate resilience within and between sectors. But to highlight one example, a recent study from Harvard projects that by 2071, nearly half of the 204 freshwater basins in the US may not be able to meet their monthly water demand. This in part is due to the growing populations, but also because of climate change. So in around 15 years from now, water supplies are reduced by a third, while demand continues to increase. So this is really, well, what is this report is about. Next slide, please. The report is a result of a collaborative effort, as Jonathan mentioned, by a team of economists and climate specialists. And through a series of case studies, we explore the operationalization of water resilience in different contexts. These case studies, they showcase the practical applications of water-centric economic resilience principles, demonstrating how they can be implemented to build resilient economies. And there are examples, for instance, from Australia's Murray-Darling, but also from Chile, from Niger, in the Niger Delta in the Sahel, and of course also one example from the Netherlands. And each case study delves into the challenges faced by these regions and the strategies employed to improve water resilience. So we have a list of the partners involved. It's from governments, but also from banks and other organizations. And when we skip, we go to the last slide, you can see the QR code where you can download this report. Thank you very much.
Thank you so much, Niels. And now we're going to turn to Mr. Thomas Kessler. He's joining us from Manila. He is the principal finance specialist for disaster insurance and the sector group finance at the Asian Development Bank. Welcome, Thomas. We're really excited about your talk. The floor is yours.
Well, thank you very much, John. Can you hear me?
Very well.
Okay. Well, hello, everyone, and thank you for having me. I guess this is really a great topic, and it couldn't be, in my opinion, better to start with the topic of insurance in this Water for Economic Resilience webinar series. And actually, in fact, we, ADB, have earlier this year supported the government of India with the organization of a regional workshop on the role of insurance in financing climate risk. And this was one of the follow-up actions that India has committed under their G20 presidency in 2023. And we have invited the chair of the operating committee of the Insurance Development Forum, Rowan Douglas, for some of you who may know him. And he had a keynote speech, and Rowan emphasized that the concept of insurance is more than just paying an insurance premium for a potential claim payout sometimes in the future. Actually, it should be seen and remembered as an institution of our society. That enabled sustainable growth and historically has been an important ingredient to ensure economic resilience. If you think about it, throughout the Industrial Revolution, technology innovation was essential to economic growth. But innovation technologies such as, for instance, steam boilers were initially leading to high risk and lots of losses. And in fact, it were the insurance company who developed standards to make boilers safe. Eligibility for insurance became dependent on compliance with these standards, and insurance became a prerequisite to receive finance for investments. So the industrialization and the urbanization also was accompanied with massive fires in cities. And to receive, again, insurance, conditions on 3 levels had to be met to reduce that fire risk. First of all, behavior needed to be changed in a certain way so that the risk was reduced. Fire departments and building codes needed to be established and implemented to be better prepared. And risks had also to be pooled and shared with other cities and countries through reinsurance. So, basically 10 years ago, the Insurance Development Forum, also called the IDF, was established with the objective to contribute to the Sustainable Development Goals and the implementation of the Paris Agreement. And the IDF is a public-private sector platform where the insurance industry, governments, and the international development community come together. they have access to millions of dollars of donor funds for programs where primary focus really is risk modeling on open platform. This will lead to informed risk reduction and risk finance decision, including nature-based and inclusive finance and insurance solutions. And in addition, important is that private sector finance, including insurance, the asset side of the insurance industry is being mobilized for sustainable infrastructure investment. So next slide, please. In my presentation, I will try to further outline how the water sector can benefit from working with the insurance industry as part of an integrated risk management approach. So let us look at an ADB approved loan for the government of Nepal to build a water supply project that alleviates acute water shortage in the Kathmandu Valley, where water is becoming scarce. The project consists of an inter-basin water transfer from Melanchi Glacier River in the first phase, and then from Yangri and Larke River. These are rivers in adjacent catchment areas, and the other river would be accessed in a second phase. But in June 2021, during the monsoon period, a glacier lake overflow flood mixed with a huge quantity of debris caused by landslide occurred in the Melanchi River. And the then just completed headwork system of the phase 1 project were completely damaged. And of course, this disrupted the diversion of the water to the communities of Kathmandu. So we have to understand that the Hindu Kush Himalaya region is the world's largest ice reserves outside of the polar region. And these reserves feed 10 major Asian river systems, and they provide food and ecosystem services that sustain the livelihood of 240 million people in the mountains, but another 1.65 billion people who live downstream. And the Hindu Kush Himalaya region is at the front line of climate crisis because of it is warming faster than the global average. And this melting of the glaciers and the permafrost increases the number of disaster events, and this pushes up economic losses and the number of people killed or displaced by such event. So the question is, how can insurance help to make infrastructure projects, their investments and their surrounding communities in that region more resilient? Next slide, please. Now, the answer to that question is very important to ADB because under our strategy 2030, we have, amongst else, committed to tackle climate change and build climate and disaster resilience. And we have launched at our climate change, at COP28, our climate change action plan. And we have identified several climate commitments with the ambitions of becoming Asia and the Pacific Climate Bank. And so we will allocate 100 billion in climate finance from our own resources between 2019 up to 2030, of which 66 billion for mitigation and 34 billion for adaptation finance. Now, we can't achieve this on our own. Hence, we are promoting partnership amongst the diverse stakeholders for knowledge and exchange. And most importantly, we need to catalyze and mobilize additional co-financing resources for sustainable development, especially from the private sector. And the private partnership with the private insurance industry will help us achieve our identified focus, as we have published under our sector directional guides, including the one for the water, but also the finance sector. And we cannot afford that investments are being damaged by disaster events such as happened in Melanchi. And these are indeed increasing. So on the next slide, I'd like to highlight that at ADB, building adaptation and resilience is part of an integrated risk management approach, which hugely depends or benefits from the insurance industry. Now, it all starts with building the capacity for risk-informed decision. And this requires the access to sophisticated data analytics and probabilistic multi-hazard risk modeling. The insurance industry can help to identify and quantifying the risk, the economically most efficient priority measures and investment to manage disaster risk and the climate change risk, considering exposure growth into the future, but also climate change scenarios can be calculated and prioritized. And these measures are complementary, and they include, to start with, most importantly, disaster risk reduction investment. But then when disaster happened, Build Back Better and rehabilitation and construction project need to be climate risk informed. And eventually, disaster risk financing instruments, including insurance, is important to be taken into consideration. So for this, emerging technology and scientific research will further help improve risk management activities by using Earth observations, big data, and artificial intelligence, and mobile technology and social media. But also the cooperation with academia needs to be leveraged. To successfully be able to implement disaster risk reduction and financing solution, it is important to enhance the enabling environment that address data constraints and legal and regulatory gaps, and affordability and trust and financial literacy. In the next slide, I'd like to shortly focus on the disaster risk financing solutions, which main purpose are to provide access to immediate liquidity when a disaster strikes. Now, there are indeed a number of disaster risk financing instruments which are all complementary. But again, the key is it all starts with leveraging the probabilistic multi-hazard risk modeling expertise of the insurance industry. And this is to understand with which frequency, what severity of a disaster impact has to be expected. And risk reduction measures will reduce the expected disaster impact for a given event probability. So that's the basis and the key. But the models then can be applied to quantify the cost benefit of risk reduction measures and to understand up to what extent it makes economic sense for the risk to be either retained and financed through contingency reserves or contingent debt credit financing. But at some point, it will be better to transfer residual risk to the insurance market or the reinsurance markets or the capital markets. So let me go to the next slide and mention some concrete examples for the role of insurance in financing disaster and climate risk, and perhaps trying to find the relevance for the water sector. So as mentioned at the beginning, building adaptation and resilience in the Hindu Kush Himalaya region is an initiative launched at COP28. The aim is to develop multi-hazard assessment modeling capabilities, which is extremely challenging in that region, and therefore needs to have the insurance industry working together with academia and leverage their both expertise, because the cascading effects of multi-hazards combined together are of an unseen dimension in that region. Now, the understanding of climate risk in that region will then help to implement early warning system, but also to make risk-informed investment decisions. And the aim is to do this in a standardized way across the region. So, for instance, in Nepal, the private sector is considering some 120 to 180 hydropower investment, and they will all have to benefit from such an initiative. in order not to repeat Melanchi disasters. As another example for resilient infrastructure finance, we are working with the insurance industry and the Pacific Regional Infrastructure Facility, PRIF, this is called PRIF. And that's to better understand the risk across the life cycle of the infrastructure project. And thereby, such received risk advisory services already in the planning phase of the infrastructure project will allow to improve the design of the project and then to de-risk the investment across its life cycle. Now, PRIF is a multi-donor platform with a pipeline of 1.5 billion, which includes water and urban sector projects. And the liability of the insurance industry can be leveraged, but then also, can mobilize more investments. And the idea is also to bring in the asset side of the insurance in order to have their investments co-financing such projects which are adequate for the private sector. Now, ADB also has launched at COP28 a nature solution finance hub to promote investment into nature capital and biodiversity. And we are working, as an example, on a project to replicate a coral reef finance and insurance scheme that has been successfully implemented already in Mexico and other Latin American countries. And coral reef provide food and livelihoods for lots of millions of people, but they also protect coastal communities because they can absorb 97% of wave energy. And on the other hand, coral reefs can be damaged themselves by tropical cyclone and tsunami. So the aim is to establish a public-private sector fund to maintain the value of the coral reefs, but also to protect the ecosystem and the communities through parametric insurance solutions. Financing the just transition is an important area to work with the insurance industry. At COP28 also, one of the major focus has been stipulated in increasing the investments into energy efficiency, which can contribute to 40% of greenhouse gas reduction if done more systematically. And de-risking energy efficiency investment is key. And there are insurance products that have been developed to take technology risk. And I could imagine that this can also be used in the water sector, and eventually it will promote to investments into more energy efficient investments and perhaps also water efficient investments. And it will help also banks to more easily lend into that sector. We have been working also on a knowledge product that understands the impact of SMEs on the health of the ocean. And in the blue economy, like in the normal economy, 90% of all the enterprises and 70% of all the jobs and 40% of GDP, are stemming from SMEs. And we are establishing a blended finance solutions for the blue economy, which help SME to invest, to access financing, to invest into more ocean healthy friendly operations. And at the same time, catalytic funding from ADB and other development partners will attract private sector financing in order to provide this SME missing middle access to finance. A lot of work in the industry has also been put into a project which is called Developing a Disaster Risk Transfer Facility in the CARIC region. The CARIC stands for the Central Asia Regional Economic Cooperation, which includes 10 countries. And in that project, risk modeling is being developed to promote cost-benefit analysis, especially also focusing on flood risk reduction measures for cities in the CARIC region. And a roadmap has been established for a regional risk pool solution. And eventually, the issuance of a regional disaster relief catastrophe bond covering earthquake and flood risk is being considered. So with this, I'm coming to the last slide, and let me just conclude with some summarizing statement. Insurance is an institution of society which needs to be applied again as really the purpose is for. Insurance supports an integrated risk management approach and needs to be involved in the early stage of any project. Insurance will lead to risk-informed decision and more sustainable investment project. It will contribute to safeguard water as a precious resource, but also protect investment and communities from its potential devastating threats. Insurance is not an option, it's a must to cooperate with the insurance industry in any form, as insurance plays an important role to achieve the SDGs, the Sustainable Development Goals and the objectives of the Paris Agreement. And we can leverage the long-standing expertise and financial strengths on both the liability as well as the asset side of the insurance industry. Insurance has also been more and more widely recognized and supported by donor countries. And I would really recommend AGWA to enter a form of partnership with the Insurance Development Forum to leverage that platform and to test it on specific water project that can be scaled across Asia with our support and across the globe. So I hope you could follow my intervention, and I was able to accentuate how the insurance industry could be leveraged to promote investment in the water sector. And I thank you very much for your attention, and I take any questions you may have.
Thank you so much, Thomas. And I neglected to read your brief bio too, so I'm going to read it here as people start to put questions in the Q&A section. Thomas has more than 25 years of experience in the private reinsurance market, having actively managed risks, developed reinsurance markets, and implemented innovative insurance solutions for the private and public sector to close the protection gap in the area of natural hazard, credit, political, property and casualty, agriculture, and life and health risks. Since 2018 at the Asian Development Bank, and in his current role in the sector group finance, is supporting the development of sustainable and climate finance solutions, amongst else, leveraging the value proposition of the insurance industry and to unlock private sector capital investments into resilient infrastructure, blue and green SME, energy efficiency, bamboo value chain, and disaster risk financing. It was an excellent talk, Thomas. I want to maybe ask one initial question that really comes from the Q&A. It came during your talk, and I think it's about maybe to put it in a larger context. The ADB, when it first really began talking about climate change, was really focused on climate mitigation, about how we deal with carbon emissions and carbon sequestration, how we slow down, in effect, climate change. And this webinar, the focus of this session has really been much more on adaptation and resilience, how we adjust and anticipate impacts. And I'm curious, do you see the ADB as changing or rebalancing the efforts between mitigation and adaptation right now? And if so, is there one, are they in conflict with each other? Are they cooperating? And does insurance have a particular role to play in that space? Thanks.
Yeah, thank you very much. And indeed, as I said at the beginning, right, I mean, we have committed 100 billion to climate finance operations. And, you know, the larger part is allocated to mitigation, because obviously it seems to be easier, but a focus is indeed has to happen on adaptation, because it will take time to have the net zero implemented. I say, meanwhile, you know, even if we are reaching net zero, we are targeting our targets on greenhouse gas emission reduction. You know, scientists say, well, the effect of global warming in terms of disaster risk frequency and severity, you know, will not change immediately. So adaptation is absolutely key. And as I was trying to highlight, again, the insurance provides tool to understand how climate change scenarios will be influencing investments into the future. And so taking that knowledge will allow us to quantify what is needed to invest more, so that the investment, or well, what will lead to additional cost in order to make the investment more resilient, and in what is the benefit of adaptation measures. And it's interesting because some of the models we have used, you know, sometimes doesn't show a big benefit today. But if we include IPCC climate change scenario, then suddenly we realize that, well, what we would invest today in additional cost for higher resilience and adaptation has a huge benefit in reducing losses, you know, in 10 or 20 years, depending on the scenario. And I think that's really where, you know, we need to start to include the value of insurance. So as I was saying from the beginning, this has been done in the past history and should be used also going forward. It's not at the first instance to pay a premium and to ensure, you know, a payout. It's really to use the expertise of the insurance to understand how losses and damages can be reduced. So I think, you know, that's really the way that we are trying to leverage the insurance industry.
I think that's a brilliant answer, and what I hear that you're saying is that while we continue to need to accelerate our efforts on mitigation, actually the pace of climate change is such that we really need to get we see, especially in the Asia Pacific region, very dramatic impacts already, and that these are also accelerating, and so insurance that probably has its strongest role to play right now in helping to address both its current and emerging impacts. And I love this idea that we need to, that there are impacts that that are simply projected to happen 20 years or more away, that we really need to be able to prepare for. Now, that's the kind of long-term viewpoint that I think is absolutely critical. We have another question. This is from a colleague. She said, you mentioned that the insurance industry can retain risk with contingent financing or transfer risk to capital markets. What do you mean by this transfer of risk to capital markets? She says, what would I understood from your talk, you mainly discussed the opportunity for insurance finance to projects to reduce risks. So maybe this idea of like, where are we transferring risks, who's sharing it, and what are the market mechanisms that are involved in that process that you see maybe evolving right now?
When I talk about you know, transferring risk to the capital market, there is an instrument that has been developed you know, for the last 20 or 30 years already by the insurance industry, where climate and disaster risk have been so big that insurance and reinsurance is not sufficient to carry it on their own capital. And so new forms of alternative capital has been found in capital markets where investors would be happy and are happy to diversify away from financial risk into non-directly correlated risks such as disaster and climate change risk. And whilst the insurance industry has been used and developed, such risk transfer for themselves, it has been applied more and more also by sovereigns, by countries, by government, and World Bank has been leading in that, and ADB is catching up and is also supporting this. And so I think this is really the way, for looking at unexpected risk with high frequency but low probability. And that's an area, as I said, there are different ways to structure disaster risk financing. So providing immediate financing after an event happens, the quicker this financing comes, the more effective it is. And so parametric structures that enables a quick capital financing or injections from the capital markets will be extremely helpful, but this only applies for a certain layer of the risk. So one needs to understand that for some events that would happen more frequent, this is economically not sustainable. So it's better to work with other instruments. But first of all, to start to reducing risk in lower frequency and severity areas. And as much as the severity increases and the probability reduces, there are other instruments, and risk transfer to the capital market is one of it. So I don't know if I answered the question. I see there is the 1-year term policy of an insurance, and so these catastrophe bonds, they are usually 3 years. And as I mentioned, for instance, linking de-risking insurance product with energy efficiency or perhaps water efficiency investments, which are longer term, the industry is trying to structure and to adjust these terms to the investments. So providing 5 or even, longer terms protection and finding ways to renew these structures more efficiently. So I don't know if this part of the answer helps.
I think it does, and I think your response to the question in the Q&A is also relevant. And here you have an interesting role, I think, in your work, because you're trying to also balance not just engaging with the private insurance sector, but you're also engaging with finance ministries, how they think about essentially national governments or regional governments themselves playing an insurance role. That we're thinking about insurance in that broadest sense, and automatically in that public policy sphere and the regulatory sphere, where we at least have a clearer opportunity and stronger incentive for thinking over longer timescales. Is that correct?
Yes, and right. And I think really the discussions are coming up in the Insurance Development Forum, to approach the issue really from a financing point of view and saying, well, we have assets and we are happy actually to invest them in ESG compliant projects. And this will match our liability side as well. But coming up from that point, they can do so if they are involved in the planning and of the project, of the infrastructure project at an early stage, and so help actually to improve the design and to get comfortable. And so, again, having this leverage on both sides, I think helps projects that are more resilient being financed by private sector investors.
Super. We have 2 questions that are among the attendees that I'll allow them to both give their questions orally. And I'll start with Bernard Jones and then turn to Madeline Kaiser. If you keep your questions short, and then we'll turn to the next set of speakers. First, Bernard Jones.
Yes, thank you for the information you given me. My question to you is, can you give a little deeper depth on the role or the potential role ESG actors can play towards the insurance industry via the water sector?
All right, thank you, and Thomas, your response.
Yeah, I guess that on the slide where I show examples, right? I think I could have perhaps spoken a little bit more. But what I tried actually is to give examples where water plays a role either as a valuable resource or as a threat. And I guess that's how I approach it. So where there is investments to be done for using water as a valuable resource, I think there are ways of insurance to come in and to provide risk advisory service to make sure that these become more resilient to the threats of the water. And where this doesn't make any economic sense anymore, well, then the risk can be transferred. But there are other risks than threats of waters. There are other risks for any water project across its life cycle that may come from other reasons, and where the insurers can be of support, so that ESG investors become more comfortable and will align the investments with the de-risking. So I think there is a core there is working in partnership. And what I want to say is actually that insurance industry has 30 trillion of assets. So they are asset manager and investors themselves, and they are under pressure and looking forward for more ESG investment. So they should understand what they are talking about. And the Insurance Development Forum is currently discussing to set up a investment pool. So to find a few companies, insurance companies, that put a fund together, which is specifically invested into infrastructure, resilient infrastructure and adaptation project. And I think that's it's a process that has been kicked off.
Fantastic. Thank you so much,
Thank you
Thomas.
very much.
Yeah, and thank you for your question as well. I appreciate it. All right, now we'll turn to our second set of speakers. This is a joint presentation coming from Spain. We'll have Elsa Sanchez Elitho. Elsa Sanchez has more than 20 years of experience in insurance and agricultural risk management. She has performed a professional career in Agroseguro, which is the management company for the Spanish agro insurance pool. Elsa currently works as responsible for strategy and corporate governance, providing technical support on corporate strategy, governance systems, sustainability, and ESG policy and regulatory compliance, amongst others. She's also in charge of international affairs at the company, providing support to other countries and developing their own agro-insurance models, which is hopefully how many of us will be hearing her today. And joining her is Jose Antonio Hurtado Puerta. Jose Antonio is an agricultural engineer. After 4 years working with two multinationals on field crop seeds, he joined the Consorcio de Compensación de Seguros, or CCS, in 1991. Through CCS, he has developed most of his professional career. He first served as head of agricultural insurance, focused on the task of adjustment control and taking part in meetings reviewing the agricultural insurance lines as representative of the CCS. He is currently Deputy Director of Agricultural Insurance there. The floor is yours. We're very eager to hear your thoughts. Thank you.
Thank you very much.
Thank you. Okay, we will start. Hello to all participants. First of all, my colleague Elsa Sanchez, and I would like to thank the Alliance for Global Water Adaptation for inviting us to participate in this webinar. We will try to briefly explain the agricultural insurance system in Spain and its adaptation to the increase in claims due to climate change. The guideline we will follow is the one shown in this slide. First, we will comment on the main participants of the in the system. Then we will look at the impact that climate change is having on the claims rate in recent years. And to do so, we will review the history of the system, and then we will comment on the main claims recorded in their impact on insurance and reinsurance results. We will continue to give our opinion on how to act in this situation, and we will end with some final thoughts on what agricultural insurance can and cannot do in the face of climate change. Well, since 1980, Spain has developed an agricultural insurance system that currently covers all agricultural, livestock, fish, and forestry productions against all climatic risk and various animal diseases. This system is a successful example of a public-private partnership with 4 main actors. On the public side, we find INISA, an entity under the Ministry of Agriculture that promotes insurance, establishes some of its characteristics, for example, territorial scope, risk, yields, etc., and above all, subsidizes the cost to producers. Also, the autonomous communities, the regions in Spain, subsidize the cost of insurance. Another public part is the Consorcio de Compensación de Seguros, CCS, which is a public company attached to the Ministry of Economy that provides reinsurance to the system. The CCS is a not-for-profit entity that endows its equalization reserve with all the income it receives from its role as co-insurer and reinsurer. On the private side, we find the insurance companies that operate grouped into a co-insurance pool called Agroseguro, and the CCS also participates in this pool of insurance company. Agroseguro is responsible for the design of insurance products, policies, rates, loss assessment, payment of claims, etc. And the other private part are the producers who take out insurance, suffer the damages, and receive indemnity payments in case of damages. The terms and the condition of almost all available insurance policies are reviewed annually, and these reviews led by INISA involve the 4 above mentioned actors, each one with different functions. Well, we need a bit of history. Maybe if you pass the next one. This slide shows the history of agricultural insurance and reinsurance in Spain from 1980 to the present. The green line represents commercial premium net of reinsurance premiums. The red line represents the claims, and the blue line represents the CCS equalization reserve. The green bars are reinsurance premiums, and the red bars are reinsurance claims. The history shows three different periods. As can be seen, the system had a difficult start from 1980 to 1992 due to lack of information and experience. The volume of business was small, but claims almost always exceeded premiums and the reinsurer was not able to build up its equalization reserve. In this period, the state's support was essential to continue moving forward. But things changed in 1993. The system was strengthened and the result improved, which allowed the CCS to adequately endow its reserve. In the 24 years from 1993 to 2016, CCS payments to Agroseguro as reinsurer have exceeded reinsurance premium in only 4 years. You can see there, 1995, 1999, 2005, and 2012. And always in connection with severe droughts. We thought it was the only systemic risk that could happen. In 2016, the CCS equalization reserve reached 887 million euro. So stability of the system seemed to be warranted. However, since 2017, the loss ratio has increased very significantly. Droughts is now more frequent and intense, but it's not the only cause of the imbalance. In addition, there have been some severe frost and a significant increase in storm activity and hail damage. The increase in this risk is clearly related to climate change, as you can imagine. 5 out of the last 7 years, the claims have been very high, and the CCS has had to pay to Agroseguro amounts much higher than the reinsurance premiums received. This has led to a very significant reduction in the CCS equalization reserve, which currently stands at 353 million euro. In view of this situation, there is a clear need to take measures to ensure that agricultural insurance system continues to be a useful tool for the risk management for producers. And now Elsa is going to go on.
Yes, I will go through these last years, which Juan Antonio spoke before, from 2017 especially. You can see here a summary of the main climatic events and claims affecting agricultural insurance in Spain. So in 2017, we have a severe drought, more than 200 million euros claims, and 1.4 million hectares damage. Also, we had quite a severe frost affecting mainly vineyards. And 2018 was a year with one of the highest amount of heavy hailstorms in our history. Also followed in 2018 of severe storms. And as you can see, in 2020, we had we continue with some severe storms, and in 2021 we had one of the most severe snow events, very low temperatures at the beginning of the year, the storm Filomena, which had a damage of 80 million euros. And for this, in 2022, we suffered one of the most severe frosts in our history, affecting mainly fruit trees and nuts. It's more than 200 million euros in damages. And also we had drought damages affecting mainly two arable crops. And finally, last year, we had also quite a combination of very severe climatic events, mainly affecting arable crops, and were due to drought damages. We have the most severe drought in our history, with almost 500 million euros claims and more than 2 million hectares damage. And also we had quite a lot of hailstorms with more than 200 million euros. So as you can see, for the last years, we are having quite a lot of severe climatic events, which is significantly increasing claims in our system. Going deeply into what happened these last years, and similar to what Jose Antonio explained before, you can see in this graphic the evolution of risk premiums and claims, and from 1990, and you can see here clearly what is going on in these last 7 to 10 years. So claims are increasing sharply, and we are facing a great and very fast increase in claims and in losses due to these climatic events, which is affecting, of course, the result of the insurance, as we will see later. So focus a little bit more on what happened in last year, in 2023. We had severe records. One of that record was the claims record. We are not very proud of it. It's more than 1.2 billion euros in claims. And you can see here a summary of the main climatic events that caused these 1.2 billion losses. As I said before, drought costed us almost 500 million euros, and also we had hail, frost, livestock damages also. So we had damages in most main productions in Spain due to a combination of different climatic events. Of course, drought was the worst one, but we had also hail and frost, which causes quite a lot of damages. We had also some other records which are maybe more positive. One of those records last year was the record in total premiums. We had, for the first time in our history, also more than 1 billion premiums from producers, which means that producers trust in insurance, and they see the insurance as a useful tool for protect their farms from these climatic events. So you can see here the evolution for the last 10 years of our total premiums. We have 17% growth over 2022, and an average growth of 8% for the last 10 years. And also, as Jose Antonio said at the beginning of the presentation, there is a subsidy for insurance costs for producers. Is around 50% of the total cost. Also, in terms of insured capital, we reached the last year in 2023 the highest amount of insured capital, of capital in risk also, and we've been growing for the last 9 consecutive years, which means, as I said before, that producers trust more and more in insurance as a useful tool to protect their exploitations. So,
well, this slide only seeks to highlight the consequences for reinsurance due to the recent increase of claims. You can see the difference in the loss ratio before and after 2017. The figure for the first period, 52%, gave us reassurance, while the 265% for the second period forces us to take action. We have to do something, and ESA is now going to to tell you what we think we should do.
So, what should do to cope with this new climatic reality? On our side, and as we in Spain have a system based on public-private collaboration with several stakeholders, the main idea we would like to highlight, the first one, is that all actors in the system should adapt to climate change. It's not a question of only one of these stakeholders. Each one must contribute to that in the area in which is an expert. So producers should adapt their cultivation practices, their crops, in view of this new situation, so they can ensure their farms remain sustainable. Public administration, ENESA, and the regional governments are already supporting agricultural insurance, supporting producers, allocating subsidies, and favoring all those farms that are better adapted to climate reality. As the insurance sector insurers, we are adapting our products also to the current climatic conditions because we need to maintain the technical balance and the viability of our insurance products in order to be able to continue offering that to producers. So individualization of covers and rates, review of our bonus and surcharge system, or some specific measures addressed to policyholders with relative high claims are some of the measures that we are taking in order to maintain the balance of our portfolio. And also from the side of the reinsurer, the consortium, they are also adapting these premiums and reinsurance warranties according to the circumstances and needs. So in this current situation of increasing claims, they'll continue to act in the same way in order to help the system to maintain the viability and the financial balance. And it is expected that there will be an increase in the reinsurance premiums in the medium to long term in order to maintain that balance also. And we would like to conclude with some final thoughts about our view as insurers and reinsurers of this, how we are coping with these climatic conditions. And the first conclusion is that we noticed that climate change effects have accelerated in last year, especially in the last decade. And year 2023, as you see before, has been one of the most challenging years in our history. All actors in the system are committed to achieving the sustainability and to continue working for the sustainability of the primary sector. And on our view, the collaboration of all stakeholders taking the necessary measures and adapting according to their role and to their specialty is crucial to guarantee this viability of the system. Of course, agricultural insurance products need to be adapted, establishing premiums and covers in accordance to this current climatic situation. That's clear. And agricultural insurance can mitigate losses of viable farms, but agricultural insurance cannot make farms that are not adapted to climate change viable in the long term. Agricultural insurance is a risk management tool, but it cannot adapt farms to climate change. That's on the role of producers and on other stakeholders. And as final remark, we would like to highlight that agricultural insurance in Spain is committed with the present and the future of primary sector and society at large by promoting innovation and insurance products technically balanced and adapted to the producers' needs. So we thank you very much for your attention, and if you have any questions, we'll be happy to answer. And
a fantastic talk, Elsa, Jose, and in many ways quite a disturbing one too, in terms of the types of impacts that you've seen in the real acceleration. I mean, while we wait for questions to enter the Q&A, I think one of the observations that I have is that it seems like in what you, Jose, identified as the kind of first and second phases of agricultural insurance in Spain, that there was a very strong interest in having, trying to create a fairly efficient system, one that was, that all of the parties really had a strong incentive to be able to work together and make sure that it functioned in a sustainable way. But it feels like right now that there may even be kind of competing interests in what seems like a new system that is effectively emerging. And I would say, especially in the if Thomas was talking especially about insurance, in a way, I think a lot of what you're talking about mostly is reinsurance and the role of the public sector and how it serves as a backstop for these systems. I'm curious. This seems to be moving from just like economics to kind of a political economy issue, and that it could even be a kind of electoral issue, like what that there could be some competition and different political actors, and how the role of the government itself should be helping the agricultural economy transition. Is that correct?
can you just repeat the last part of the question, because I lost a little bit It's the question about competition. I didn't catch it, sorry.
No, I apologize. There's a lot of background noise where I am. I'm in a city. But the many actors, you talk about producers, you talk about companies, you talk about insurance and reinsurance. And reinsurance in this case, at least 50% of last year was really the public sector, right? It's and that seems like it is a kind of an invitation for this to be a political issue, an electoral issue, for maybe different political parties to have kind of opposing or quite different responses and visions about the role of the public sector in supporting the agricultural economy. Do you see this emerging in the political debate in Spain right now?
No, there's no this debate in Spain. Since 1980, all political parties they agree with this agricultural policy of the ministry. Always has been supported with subsidies for all the government since 1980.
Yes, we had very different governments from different thoughts and parties, and all of them supported strongly the agricultural insurance system as it is working since almost 45 years, because it is a system that works in our country, and there is a high level of covers. And the government provides this subsidy, which is included in the national budget, so they know the amount of money that they are going to spend during the agricultural campaign for this support. And producers has this subsidy, which helps them to take out the insurance, so they are better protected in the end. So the system works for all parties, And I think that's one of the key points of this continuous support. That all parties they have different interests, but in the end there is a common benefit for everyone.
That's quite interesting. I am curious if it's able to itself be sustainable as a kind of a consensus approach. We have a question. You're increasing premiums to ensure financial viability of the insurance system. Are you differentiating premiums according to the resilience practices of farmers? This seems like maybe a kind of regulatory process, or how insurance companies are themselves assessing the premiums and evaluating that by particular farmers. Can you give some insight into how this process may be changing right now?
Yes. Insurance product design and premiums are set here in Agroseguro. Agroseguro is the management company representing all the insurance companies that take part in the agro insurance pool, which is working in Spain. So we are representing currently all of these companies. And insurance premiums are set based on the risk and on the crop, on the risk and variety, on the area, and sometimes also is quite very specific for each insurance for each producer, depending on the insurance product. So we have quite a very specialized insurance premiums depending on the products. Regarding the resilience practices, yes, we have some specifics if they are taking some kind of preventive measures, but it's quite limited currently in Spain, I think.
But as well, the previous results of every producer is important to fix their premium in the most of the cases. So the better your results are, the better your premium is when you are taking out the insurance. But we always go behind the risk, really, because we need the results previously to fix the premium.
That's quite interesting, and it potentially has the added risk of having some kind of lag time as well, as you face new types of hazards that are beginning to emerge. Well, thank you very much, and we're going to turn now to our final speaker. We're really grateful for such an excellent talk, and I hope that many in the audience will reach out to you independently. We'll have your slides available with the recording. I'm now turning to Sophie Tremolet, who has she leads the water team within the Environment Directorate at the OECD, and she focuses. The OECD itself focuses specifically on advising its member countries and partners on water economics and finance. Her team especially focuses on water quality and reuse. Sophie recently joined the OECD in Paris from the Nature Conservancy, where she worked for the past 5 years on restoring and protecting rivers of high biodiversity value and accelerating investment in nature-based solutions for water security in Europe and globally. Prior to that, Sophie had worked for 18 years as a consultant on issues of financing, institutional regulatory reforms, and private sector participation in the water sector. First as a consultant, and then joining the World Bank's global water practice as a senior economist, where she especially focused on West Africa, establishing the multi-donor trust fund, and working on blended finance issues around water. She holds a double master's in economics and international development, and we're very grateful to have you here, especially because it's, as people can see in your back window, Sophie, that it's at night. You're joining us from Mongolia. We're really eager for your thoughts and hoping that your conjoined background in both water and economics and advising from kind of high-level policy issues to individual projects, that you can help us see a way forward towards a better sharing risks and enabling resilience. The floor is yours. Thank you.
Thanks a lot, John. Thanks for this introduction. Can you hear me? I hope. Well, thanks a lot for organizing a really great session. I felt we had a good mix of presentations, both from the insurance at project level, but also getting a sense of the whole system behind it in a country like Spain, who is very much exposed to climate risks right now. And I think that's a critical thing because coming from the water sector, we tend to talk a lot about mobilizing commercial finance and tend to turn to the insurance sector as one potential way of mobilizing commercial finance, but not always really understanding all the different roles that insurers can play, and also the link between insurance, reinsurance, and the sharing of risks on capital markets, as Thomas highlighted. So I think it's essential to have this kind of conversations going quite deep into the workings of the insurance business and how it can help the water sector. And I really liked Thomas' introduction to basically tell us that insurance is one of the key institutions of our economies, and it's basically what has enabled investment to happen, because sometimes we tend to think of insurance companies as providers of finance. Thomas highlighted, yes, they have a role, they are asset holders and therefore investors themselves and can learn about investing in resilient assets, but they are also, and first and foremost, enablers of investment. And it's becoming really critical in the context of climate change, because it's what makes investing possible. Otherwise, why would you invest in a latrine if it's going to be flooded the next day and your investment has been lost? Or why would you invest in building a reservoir if there's going to be a drought and your investment can be effectively stranded from one day to the next? So I think this element of de-risking investment and therefore enabling investment is very important. And behind the insurance company, the role of reinsurance companies and the overall ecosystem that was described to us in Spain is critical. And what we heard about is the rapid onset of climate change impacts, which is, however, destabilizing the financial availability of the insurance sector. So we are facing some circumstances where some investments may no longer be insurable or may attract such high premia that it would become very difficult to engage in those investments. And what we know is often the poorest are the ones that are most exposed to the impact of climate change and that might find most difficult to access insurance in order to be able to address those risks. So I think we heard all of that, maybe a bit less on the distributional impacts. That's one of the things I would have liked to hear more from our speakers today, but something to deepen our understanding of later on. And I think what is important is to understand what can be done, as the Spanish speakers reflected, what can be done going forward, and what can be the role of insurance companies in our discussions with the water sector. So what Thomas pointed out is the knowledge and the expertise that insurance companies have, which can help in measuring climate-related risks, including direct exposures to these risks. And I think it's indeed very key, and I was myself involved in the design of a project in the Thessaly plain in Greece, which is a very agricultural area in the north of Greece, affected by flooding. There were terrible floods events that happened last autumn. And in this area, TNC, the Nature Conservancy, worked jointly with Swiss Re, with the European Investment Bank, with World WWF, with academia, in order to risk, but also to help the portfolio of investments that could help address this risk. That was before this large flooding event, and this project has not yet seen the light of day because it's actually very hard to do. And I think, Thomas, you pointed out the need for insurance companies to partner with academia. I think partnering with local actors who understand the risk and who understand where to place those investments is very important as well, because where these investments in nature-based solutions go is very dependent on local circumstances, so it requires extensive local knowledge. So I would argue for this kind of sort of partnerships to see the light of day on a project-by-project basis in a more extensive manner. So insurance companies can contribute their expertise. They can also share information and data sets on risks. But I think very importantly, they can incentivize stakeholders to adopt different practices to make different investment choices, and particularly to invest in nature-based solutions, as we heard. I think some insurance products, such as the parametric risk insurance products mentioned by Thomas, can be very decisive in doing this. And we heard briefly about coral reef insurance. This is something that TNC had developed in Quintana Roo in Mexico in 2019, and then has scaled up in Hawaii and in other places. And the characteristic of this type of insurance product is that there can be a pre-agreed payment that goes to ecosystem restoration after an event on the premise that healthy ecosystems can reduce the impact of catastrophic climatic risks. So I think insurance companies can really help, working in partnership with all of these actors, in helping literally to weather out climatic events. But I think also the presentation from Spain highlighted that there's a very important role for the public sector. And I think the public sector needs to effectively establish schemes, such as what we heard about in Spain, in order to spread the risks between insurers and reduce the risk exposure. So we have this kind of schemes in Spain. Similar types of schemes for different purposes exist, for example, in France with CatNat, in the UK with FloodRay, in order to reduce the cost of insurance and make it more affordable, particularly for the poorest. So I think we're seeing just the beginning of these collaboration between water sector actors, or sort of natural world actors, if you want, and insurance company. There's a lot more to do, a lot of understanding, mutual understanding to be developed, and I think a lot of important partnerships to be set up with a whole range of actors. So we really looking forward to seeing more work on this topic happen, and thanks a lot to Agua for making it happen. Thank you.
Thank you so much, Sophie. An excellent summary. And I'd like to end by thanking all the partners that were able to produce this collectively. We're really grateful for you attending. I hope that you will download the report, that you'll use it as a start of a conversation with us, that potentially you'll join the Water Resilience for Economic Resilience Consortium yourself. There's so much rich material here. I feel so struck by the poignancy and timeliness of these issues, and how we need to reconceive insurance, that there are limits in how we have been practicing, that we may now be hitting the edges in which we need to actually, as suggested in Spain, but we need to actually change the direction, build a new consortium and a new consensus. Thank you all. Good evening, good morning, and good day. Take care.